Hello and welcome to Crypto Paper. According to Trustpedia, if Bitcoin is known for anything, it's its volatility. With the massive swings, one expert says don't be surprised to see this crypto surge to $1 million this decade. Bitcoin is limited in numbers, it's more scarce than many precious metals, and big pension funds are starting to recognize its future, according to Fred Pye, President and CEO at 3iQ. Stay tuned with us until the end of the video. Pye was quoted as saying Bitcoin is the most successful investment of all times. Referring to Bitcoin's market cap, he said nothing has ever gone from $0 to $1 trillion in 10 years or less. When asked to draw a comparison between Bitcoin and Ethereum, he compares Bitcoin to gold and Ethereum to copper. Gold is well known as a store of wealth. Both gold and Bitcoin are scarce commodities now. Give it 2 years and Bitcoin may be twice as rare as gold, he said. Ethereum, on the other hand, tends to act more along the lines of copper. If copper prices go up, it's an indication of a healthy economy. Likewise, should Ethereum go up, the overall health of the digital economy goes with it, he added. Massive price surges of Bitcoin are made possible because of the finite supply and halving process. Every 4 years, Bitcoin halves. The last Bitcoin halving was in May of 2020. When past halvings are analyzed, there is reason to believe that Bitcoin may hit $100,000 within the next 2 years and $1 million 4 years later. Bitcoin halving. Every 4 years, the supply of Bitcoin is cut in half. In the past, every time it halved, the price went up to a factor of 10. So $100 became $1,000 and then $1,000 became $10,000. As it stands now, the price is well on its way to $100,000. 4 years later, 6 years from now, the price, everything else being equal, should go from $100,000 to $1 million. If the properties of scarcity play out as they should, the next jump would be $10 million. The massive sell-off of Bitcoin that was witnessed in May is, according to Pye, perfectly normal. When May came to a close, Bitcoin had tumbled from an all-time high of almost $65,000 in April to near $32,000. What started to snowball effect was China's attempt to ban the use of Bitcoin for transactions as well as mining. As China employs currency controls, it is a concern. Now, this trillion-dollar asset that can't be controlled is one reason why so many people love it. However, the move made by China does not have an impact on large institutional investors and pension funds. These investors are performing due diligence. It is expected that in time they will begin to invest, a move that may be explosive for Bitcoin and crypto as a whole. The real decision makers are now involved. Up until this time, Bitcoin has attracted cowboy-style hedge funds and investors with Elon Musk type of personality. The real money stays well away. Now, the decision makers who genuinely control a great deal of the world's wealth are beginning their due diligence. The big players are not going to jump straight in. It often takes some time before they become actively involved. It's not because they're lacking interest in crypto, it's more that Bitcoin currently does not have a place in their investment policies. Current investment policies have never had to factor in a new asset class or technology. There is a great deal of talk about stocks, bonds, precious metals, and other commodities, but Bitcoin does not fit in any of the existing classes. To take full advantage of crypto, investors have to revise their policies. This may not happen overnight, but Pye believes it may happen sooner rather than later. This reticence on the part of big investors is great news for the average investor. Big players can buy Bitcoin when it reaches $1 million, but chances are good that by then, it may be too late for the little guy. Owning cryptocurrencies does not mean gold has no place in one's portfolio. Gold is an integral part of a future-proof portfolio. According to Cryptopolitan, the Bitcoin market continues to stoke both bullish and bearish sentiments, although the current outlook suggests that more people are going bullish than bearish. This mix of feelings is understandable considering that Bitcoin hasn't been very indicative of its future price movement for weeks as it swung between $32,000 and $35,000. That changed a few days ago when the price shot up to just over $40,000. At that moment, Bitcoin is trading at around $39,840. As bullish sentiments spread throughout the crypto space, there are some people like Mike Alfred who have more focus on the long-term market movement as opposed to short-term. Mike is a crypto investor as well as a co-founder and CEO of DAD, Digital Asset Data. The investor took to Twitter to make his opinion known in a tweet. According to Mike, Bitcoin will hit $1 million in value within the next 10 years. Is that realistic? To some, this projection may sound outrageous, given that Bitcoin is currently priced at around the $40,000 mark, a significant drop from its all-time high of $65,000. However, some are ultra bullish on Bitcoin and see the 1 million price target as a viable target for the top coin to achieve after the next few halvings. This notion could have originated from the fact that the coin's price increases significantly after every halving. The last halving event occurred in May 2020 and was followed by a bullish cycle that most people still think is in play. The Bitcoin market. Like any other market, Bitcoin is prone to influence by market forces of demand and supply. There are only 21 million Bitcoin tokens that will ever exist, and more than 18 million have already been mined. That leaves less than 3 million unmined coins. This makes Bitcoin scarce and ultimately keeps its price high. As more Bitcoins are mined as supply diminishes, demand will rise and the price will follow suit. That, coupled with the halvings happening every 4 years, could propel Bitcoin to very high price levels. There will be 2 halvings within this decade. Also, the growing adoption and influx of institutional funds into the Bitcoin market will play a huge role in its rise. According to CNBC, Bitcoin could rise to $1 million over the long term to become a reserve currency for the world, according to one asset manager. But JP Morgan warned of risks ahead as the cryptocurrency continues to rally. Anthony Pompliano, co-founder and partner at Morgan Creek Digital Assets, said Bitcoin could hit $500,000 by the end of the decade. It could eventually reach $1 million per coin, he added, without giving a timeline. I think that Bitcoin will eventually rise to become the global reserve currency. I think Bitcoin will eventually be much, much larger than the gold market cap, he said during the latest episode of CNBC's Beyond the Valley podcast. Bitcoin has surged over the last few months and surpassed $50,000 for the first time this week. Why is Bitcoin rallying? A number of factors are behind the rush into Bitcoin. There has been large participation from institutional and retail investors. Major companies are also getting more involved with the cryptocurrency. Square bought some Bitcoin last year, and Elon Musk's electric car maker Tesla purchased around $1.5 billion in Bitcoin, according to a filing this month. Musk and Square founder Jack Dorsey are both supporters of Bitcoin. Meanwhile, global central banks have been easing monetary policy, such as lowering interest rates and buying assets through the so-called quantitative easing program, to help cushion the blow to economies hit by the coronavirus pandemic. There were trillions of dollars that were printed and injected into the economy, and everyone, from individuals to financial institutions and corporations, ran around the world looking for the best way to protect their purchasing power. They ultimately decided it was Bitcoin. Pompliano said as he discussed what was behind Bitcoin's surge. The Bitcoin bull's prediction that Bitcoin could hit $1 million is based on a few factors, including the scarcity of the cryptocurrency, which has a cap of 21 million coins, as well as the decentralized nature of the technology. Thanks for watching this video. Make sure you like the video and subscribe to our channel.